If you follow the stock market, you've probably heard about gray market premium, or GMP. Before an IPO is listed, you might see people discussing how high or low the GMP is. Some even use it as a deciding factor before applying. But is GMP a reliable indicator? Can it really predict how an IPO will perform on the stock market? In this video, we'll decode GMP, understand how it works, and discuss whether you should rely on it for your investment decisions. Let's start with the basics. Gray market premium, GMP, is the extra price at which an IPO share is trading in the unofficial market before its actual stock market listing. For example, if a company issues its IPO at rupees 100 per share, but in the gray market, it is trading at rupees 150, the GMP is rupees 50. This means people are willing to pay rupees 50 more than the issue price because they believe the IPO will list at a higher value. But here's the catch. The gray market is not an official exchange. These trades happen through informal channels outside the stock exchanges like NSE or BSE. So, how does this gray market actually function? Well, some investors buy and sell IPO shares even before they are allotted. They do this through intermediaries who match buyers and sellers. Let's say an IPO is oversubscribed, meaning more people have applied than the shares available. Some investors who don't get shares in the IPO might turn to the gray market to secure shares early, even if they have to pay a premium. Similarly, those who already got shares might want to sell them at a higher price before the official listing. Now, let's talk about the factors that influence GMP. A high GMP usually happens when the company has strong financials. If investors believe the company has good growth potential, demand increases. The IPO is oversubscribed. When too many people apply for shares, demand in the gray market rises. The company belongs to a trending sector. Industries like tech, renewable energy, and pharmaceuticals often attract higher investor interest. There is strong interest from big investors, HNI, FIIs, DIIs. When institutional investors show confidence in an IPO, retail investors follow. On the other hand, GMP can be low or negative if market conditions are weak. If the stock market is falling, IPO demand can drop too. The company's financials are not impressive. Investors may not see long-term potential. The issue price is already too high. If people feel the IPO is overvalued, they might not be willing to pay a premium. Here's the million-dollar question. Can you trust GMP to predict listing gains? Not always. While a high GMP can indicate strong demand, it is not a guarantee that the stock will list at that price. There have been many cases where GMP was high, but the IPO listed at a much lower price. Similarly, some IPOs had a low or negative GMP, but gave strong returns after listing. Why? Because market sentiment can change overnight due to external factors like global market movements, interest rate changes, government policies, company-specific news. This is why experienced investors never rely only on GMP. So how can you use GMP the right way? 1. Use it as a sentiment indicator. A high GMP means people are optimistic, but that's not enough to invest. 2. Check the company's financials. Look at revenue, profit growth, and future potential. 3. Analyze market trends. If the stock market is strong, IPOs are more likely to list at a premium. 4. Compare with similar past IPOs. See how companies in the same sector have performed after listing. If you see an IPO with a high GMP but weak financials, be cautious. If you see a low GMP but a strong business model, it could still be a great long-term investment. In summary, gray market premium is useful but not foolproof. It can give some indication of demand, but it should never be your only reason to invest in an IPO. A smart investor focuses on company fundamentals, industry growth potential, overall market conditions. So, before applying for any IPO, do your own research, study the company, and make informed decisions. If you found this video helpful, hit the like button, share it with your friends, and subscribe to our channel for more IPO insights.